So how did I make $486 trading NVO put options? Looking at NVO, that's 15.25 on 6:30. NVO 6:30. So and I said 15.25, right? Yeah, 15.25. So 15.25 would be this candle right here. So I played NVO put options as soon as NVO approached the 50-day moving average here on the 15.30 candle, and then at 15.35 I bought more NVO put options that same day. So basically this candle right here. So I'm pretty sure I bought more NVO put options as soon as it reached the 20-day moving average. I bought somewhere around 69.14, not where it says 69.17, but I did buy somewhat close to the 20-day moving average. So that was my last time buying NVO put options, and then I sold out today on July 1st at 9:32, and when I sold out the position I made $486 trading NVO put options. So this was more of a swing trade and not so much of a day trade, and basically what the goal is you're trying to be basically try to use the moving averages as your entry points and as your exit points in a way, sort of. And then from there, try to mentalize your percentage targets. So where it says 14.17%, try to mentalize your percentage target that you might have in mind. So if your percentage target for that day is, reaching a 10% target, try to sell out your position once it is down. Once it's up 10%. Or whatever percentage target that you're trying to aim for that specific day. Try to be reasonable, try to be realistic. Don't over exaggerate these percentage targets that you're trying to aim for that day. Most people, like beginners, will try to aim for 100% gainers. Is that realistically possible? It could be, but it's not going to happen every day. And realistically, in the stock market, you will always take wins and losses. That's just part of the game of how it goes with trading. There's no other way around it. I'm going to keep saying that because obviously it's, that's how the stock market works. You're not always going to win every single day. So let's see. Let's see. Okay. Something that I do want to show you guys is that there's this free website called finvest.com. You can totally use it. It's totally free. And how you use it is basically this. So finvest.com, go where it says screener. And I highly suggest this for beginners. Click on Mega. Click where it says performance. Click where it says perf YTD. Oh my god, what? And then it's going to show you a list from stocks from worst to best. And from there, you're just going to want to analyze this list of stocks and try to analyze if they're approaching a certain support level or they're about to approach a certain resistance level. And just, if you're feeling confident in playing options, by all means, go ahead. And if you're trying to play leap options, leap options are options that expire in 6 months, in a year or 2 years, etc. And basically you can go from there and just play leap options and just, try your best to analyze the chart, try to see if, if that particular stock is about to approach a good is about to approach a major support level, or if that particular stock is about to approach a major resistance level. So analyze the charts very well. Try to use the daily chart. Typically, when I'm playing leap options, I usually try to stick to using the daily chart, if not the weekly chart. And basically, I'll just try to analyze levels of support or resistance, whether I'm playing calls or puts. So typically when I'm playing calls, I'll just try to map out my major levels of support on the daily chart, and then if I'm playing resistance, I'll try to map out my resistance levels on the daily chart as well when I'm playing puts. So basically, let's see if we can do an example using Finviz. Let's look at Apple. Right? And let's see how you could have traded Apple. Let's see if we can make an example out of Apple first of all. So Apple overall on the 30-minute time chart was in an uptrend, and basically it rode the 9-day moving average pretty much for the whole day. So what you could have done here, right, is you saw this big candle bounce off the 9-day moving average. You saw this candle right here bounce off the 9-day moving average. So what you could have done is for the very next candle, you could have played Apple call options as soon as it landed on the 9-day moving average. And then once you saw that bounce off that 9-day moving average, you could have sold out at the next you could have sold at the previous resistance level from 209 from 209.50. So from 209 through 209.50 would be the resistance level that you would look out for to sell out your position as soon as Apple reaches that major resistance level. So that way you can know when to sell out your position. That way you're not struggling knowing if you should sell or hold. That way, you're in and out, get into the next trade, and just move on and just repeat the cycle over and over again. So that's basically how you could have played Apple call options. And let's say you waited for pretty much the whole day because you're like, well, I'm not feeling really confident playing Apple using the 9-day moving average. I'll play Apple as soon as it lands on the 20-day moving average. You could have played here and played here, playing Apple call options as soon as it bounced off the 20-day moving average. It bounced here, and so you could have made money there as well. So that's how basically I would have traded Apple, or you could have traded Apple. It's just all about using support and resistance levels, using the moving averages to your advantage as your entry points and exit points, and try to analyze the previous resistance levels or levels of support to map out when it's time to sell out your position. So also try to keep in mind your percentage target that you're trying to aim for that day. Try to be realistic as well. So that is pretty much it. This is not financial advice. As always, take care and bye.